Hello, and thank you for joining us this week for the Market Carver. I'm joined with Zach today. Adam is out venturing across Indiana, going to all the different Thirdly presentations. Hopefully, you're able to join us at one of those locations, and maybe you already have if you're in Lafayette. That one's already taken place by the time we're recording this. This week, we just have two topics to cover, keeping it pretty short and sweet this week. I'm going to be talking about looking at IPO stocks, and Zach's going to give us an update on an interesting development in the housing market. So first up, we're going to talk about IPOs, when initial public offerings, when stocks go public. Every once in a while, we will get the question, is it a good time to buy IPOs? This company I've heard about or I read about or my golf buddy told me about is going public, and I think this might be a great opportunity. How does the IPO market work, or how are those good opportunities to invest? And this is something that happens pretty often. And the reason we're bringing it up now is we're starting to get a little bit increase in IPO activity. It actually has been pretty dry for most of 2023. Most recently, we had a really large semiconductor company go public called ARM. And it's actually a company that NVIDIA tried to buy recently. And then also we had Instacart, a company you might be familiar with that does deliveries and groceries and things like that, has also recently gone public. And so why we want to talk about IPOs is because the track record for them, at least initially and on average, hasn't been great. So the first slide we want to show you is looking at the median IPO return compared to the overall market. So we're looking at the Russell 3000. That takes into account our large cap, mid cap, and small cap stocks. And the numbers you see on your screen here are the relative returns. And so this is how they compare to the market, not on an absolute basis, over the 12 months after the IPO. And you can see on average, all deals are down about 20%. And it actually has been much worse here recently. If we look at the green line on the bottom for 2020 through 2022, the median return is actually negative 48%. Now, the big caveat is there are IPOs that do extremely well, and they do buck this trend, but typically we don't see great performance initially out of IPO stocks. Now, with that said, there are opportunities that we do see within our portfolios that we do look at stocks that maybe have recently been trading, and there's certain patterns that we're looking for, maybe a shorter term opportunity. But in general, when we're looking at just typical IPOs, the stocks don't do great. ARM here recently is down 20% after its initial jump on its IPO day, and Instacart also is down as well. And that's just over just a couple of days because they just went public. But typically we do try to avoid looking at hot IPOs where sentiment and emotions are really high, because it hasn't been a great edge for the market in general. Again, like I said, there are different opportunities that maybe they're that buck that trend, but on average, IPO stocks haven't done real well recently, as an aggregate for all large cap, mid cap, and small cap stocks that go public. Now we're going to shift focus, take things from the market. We're going to now go to Zach, who's going to give us a look at the housing market.
Yeah, so many of you may have heard or been taught that when considering your primary residence, that it's better to buy than to rent. And that's what this chart here is looking at, is the spread between the cost to buy your primary residence and the cost to rent. It is important to note that these are national averages, and so your local market may be different than this. The spread may be wider, may be narrower, but on average across the nation, the spread between the cost to buy a home versus the cost to rent is really at an all-time high. We've seen the spread like this before in 1981 when baby boomers were buying up houses, and then the housing bubble of 2006. And this spread really started to increase back in 2021 when interest rates were at an all-time low, and millennials were entering their peak home buying phase, starting to buy up homes pretty rapidly. You can see the red line there. The cost to rent is more static in its move up. A lot of that is due to inflation. Rent will keep pace with inflation more consistently, whereas home prices are not necessarily that way. So this is not a call for the housing market to crash or anything like that. Just noting that the conventional wisdom that says that it's better to buy rather than to rent is not always the truth, as is this case right now, where it is actually nearly $900 cheaper to rent a primary residence than it is to buy it. So something to keep in mind there. I'll send it back to Andrew.
All right, thank you, Zach. Appreciate you joining us this week. Hopefully, again, if you're able to attend one of the Thirdly dinners, if it hasn't happened already in your area, definitely reach out to our office and let them know that you'd like to attend an RSVP. You probably got something in the mail or an email about that as well. If you'd like to schedule a meeting, we would be more than happy to talk with you. Reach out to our team at the phone number on the screen now or at the website, yourlifeafterwork.com. And thank you very much. Have a great week.